The Silver Reckoning: Physical Reality versus Paper Promises. On the second day of 2026, a financial impossibility materialized in Tokyo within Japanese tech giants who could no longer find the metal at any cost. The COMEX futures market was quoting that very same silver at just $1. Usually the invisible hand of the market fixes this instantly. Traders would simply buy the cheap New York contracts, take the metal, and ship it to Japan for an easy profit, bringing prices back into balance. It's a mechanism that has stabilized global trade for generations, but right now at the secret, walking into a dealership where a car costs double the sticker price or a grocery store charging 83%. But Japanese manufacturers, the backbone of the world's, they are paying the ransom because their supply lines have vanished. The fuse was lit on New Year's Day when China quietly overhauled its silver export laws. Overnight, 90% of Chinese silver vendors were disqualified. Over 300 established firms that acted as the vital pulse for Asian industry were wiped off the board, leaving Japan, a nation with zero silver mines of its own, completely stranded. Japan relies on China for two-thirds of its silver. Solar manufacturers and medical tech firms are bidding up the price by 80%. This brings us to a terrifying math problem for Western investors. While the world pays $130 for the real thing, global banks, against those promises, the actual physical inventory in the New York vaults is a mere 38 million ounces. That is a 21-to-1 ratio of paper lies to physical truth. If even a tiny fraction of those investors demanded their actual metal instead of a cash check, the vaults would be empty in hours. Japan, they severed the tether between the New York digital price and the real world. These banks are now cornered, facing tens of billions in potential losses. This isn't just a market fluctuation as we analyze it here at The Secret History of Currencies. It looks like the precursor to the most violent short squeeze in history. Market, it's starting to choke the financial institutions that thought they could control the supply through spreadsheets alone. Don't be fooled into thinking this is just a Japanese hiccup. The cracks are spreading everywhere. Has reached levels even inside China, the world's leading producer. Local buyers are struggling to find metal at the official price. London, the heart of global silver trading, is seeing similar distress signals when the world's most liquid market starts charging massive get it now premiums. The gears of global finance are grinding to a halt. We aren't looking at a temporary logistics delay, we are looking at a structural failure. The desperation in Japan is purely logical. To build a single solar panel, you need silver paste. There is no substitute. To build an electric vehicle's brain or a life-saving medical device, millions in penalties and ruined reputations. Paying $130 an ounce is a bargain, compared to losing $1 billion contract. This is why the price won't just cool off when you lose 67% of your supply in a market that was already in a deficit. The price does, and climate teleports. Right now, the New York market is screaming a warning through a technical phenomenon called backwardation. In a healthy world, buying something for delivery 3 months from now is more expensive because of storage and interest. Today, silver for immediate delivery is more expensive than future promises. This is a fire alarm. It means the big players no longer trust the IOU. They want the metal in their hands today, regardless of the cost. The last few times we saw this, silver prices exploded shortly after. But those were minor tremors. This is the earthquake. The math is brutal. Japan needs 2,600 tons a year. If they try to buy every spare ounce from Mexico, Peru, and Chile, they still come up 1,500 tons short. There is simply not enough silver above ground to fill the hole China left behind. You can just mine more in a few weeks. It takes a decade to start a new mine. The only thing that can move is the price, and it has to move high enough to force people to stop using it. We are likely looking at $150 to $200 silver just to balance the scales. As we conclude this deep dive on the secret history of currencies, remember that the paper market is a house of cards. On January 15th, the next major delivery cycle begins. The system will break. The exchange will be forced to settle in cash, admitting to the world that their silver was just digital ink. When that happens, the gap between the $71 paper price and the $130 physical price will close. but not by the physical price coming down. The era of cheap, paper-suppressed silver is over, and the reckoning is just 13 days away.